Hey everyone, and welcome back. So last week we received the US CPI year-over-year data for the month of May. The forecast was for 4.7%, but instead we got 5%. And then also the US PPI year-over-year data came out today for the month of May. The forecast was for 6.3%. The actual came in at 6.6%. So again, we have new records here. And it's also important to remember that the majority of price increases that businesses have been experiencing have not yet been passed on to the consumer. So expect prices to go up on the consumer end in the months to come because, again, these businesses are having their margins squeezed and they cannot endure that for long. This is all assuming that the inflation data we're seeing here is accurate. However, Kyle Bass came on CNBC today and he said that if we actually use older methods of calculating inflation, actual inflation would come into the double digits. He's claiming that's actually 12%. And I mean, he's not the only prominent figure in the financial industry to come out against the Fed and basically call BS. You had Paul Tudor Jones come out yesterday claiming that inflation isn't transitory. You have Michael Burry coming out, months ago warning about hyperinflation. Drunken Miller going as far as saying that the days of the dollar as the world's reserve currency are numbered and will cease to be the case in the coming years. I mean, you have all of these guys coming out, and I don't think it's just coincidence. It's hard to not see it, right? I mean, even just everyday people, they're noticing prices increasing for gas, for food, just for everyday essentials. But the Fed is claiming that inflation will be transitory, that it will just go away, and this is all just due to supply chain bottlenecks, et cetera, et cetera. But I don't even think the Fed believes what they're saying. I actually do believe the Fed is truly concerned about inflation. I say that because, just earlier this month, they were talking about winding down the corporate credit facilities beginning on June 7th. Now, a lot of people looked at this and said, this isn't really tapering. And I was like, okay. And then today they come out with another statement saying that they're going to be conducting a small value exercise with mortgage-backed securities. The value obviously not that big. It's not exceeding $180 million, so okay. But these will begin on June 22nd and June 24th. So again, if what the Fed is saying is true, that inflation is transitory, it's not a concern, that everything is fine, why are they doing this? They're saying one thing, but it seems like in terms of their actions, they're going the opposite direction. It seems like they're preparing for tapering. And I believe it's going to be a lot sooner than what people are expecting. Take it for what you will, but that is just what I'm seeing based on everything I've seen and what I'm hearing. Anyways, if you guys have any questions or comments, feel free to reach out. Please like, share, and subscribe, and I will see you all in the next one.